This is the Equity Management Academy weekly podcast for October 27, 2021. Mean Reversion Trading Weekly Review. Summary. The fundamentals continue to be completely opposite of what gold and silver are doing. We have the most bullish fundamentals in recent history, Equity Management Academy Patrick MontesDeOca said. As we move in the fall, MontesDeOca said, we are likely to see another series of supply shortages. Fundamentals. We have the most bullish fundamentals in the history of these markets, Equity Management Academy CEO Patrick MontesDeOca said. Fundamentals including an economy damaged by the pandemic, supply chain issues, massive debt and printing of money, inflation, and devaluation of fiat currencies suggest that precious metals should be trading at far higher prices. Just compared to crude oil, gold and silver are undervalued. Crude oil is at $85 a barrel and commodity prices have exploded. As we move into the fall, MontesDeOca said, we are likely to see another series of supply shortages. We are looking at stagflation, which is affecting the price of just about everything across the board. In the face of all these fundamentals, why are gold and silver trading at their current levels? Gold and silver have traditionally been considered currency. Bitcoin is an excellent market to trade, but gold and silver will be around for the long term for certain. Bitcoin may not. Other cryptocurrencies may take over the mantle of Bitcoin. Nothing is going to replace gold and silver. Since the fundamentals are at odds with the precious metals markets, we rely on technical analysis as the basis for our trades. For silver, our variable changing price momentum indicator, Vcpmi, recommends this week to exit shorts at 23.31 and 22.23, and then go long from these levels. You can also exit longs at 25.20 and go short from that level if activated. Silver is trading around the weekly average of 24.12. We wait for the market to reach an extreme above or below the mean to make the highest probability trades. The market almost reached the buy one level of 23.88 early this morning. It then reverted from 23.91 after finding buyers. We have seen and we have been saying that the seasonal loss is based on a September 28 to September 28 cycle. We appear to put a bottom in on September 29 at 17.21, which we recommended our subscribers go long from that level. The next day, gold reverted back above the previous 4 days highs. The target was the mean of 1790. Gold has reached the extreme above the mean again, the sell one level of 1819. And we have almost reached that level. We reached about 1815.50 on the 22nd, and that is almost a $100 move since September 28. Gold is activating a daily bearish price momentum. We are going to see choppy trading. Just below the weekly average is a daily buy signal of 1782. We may go down to 1764, but let's see what happens. We have a bearish price momentum on the daily within the larger bullish momentum overall for the longer term. We trade below a trend line of support for a short time and then moved back up right into the weekly average, which is where we are now. The path of least resistance is to buy corrections. If you get the opportunity into the 1782 and 1769, all the way down to 1734, MontesDeOca said, there are high probability areas to accumulate and add to your long position. If we get above 1790, the target of 1829 comes into play. For the monthly data, we hit a low in September, and now we are trading between the annual average of 1840 and the monthly average of 1772. This is the range in which we are trading right now. You want to buy into this market at the low end of this range if the market comes down to those levels. If we break above 1840, then we are looking at a target of 2002. We appear to be setting up for that to happen. And if it does, it will happen real fast, MontesDeOca said. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ema2trade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, Vcpmi, is an automated AI trading system developed and tested over a decade. The Vcpmi algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The Vcpmi can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. Vcpmi algorithm. The Vcpmi code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the Vcpmi code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why Vcpmi? The Vcpmi relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The Vcpmi uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The Vcpmi can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.